Global Money Week reviews. Global Weekly Money News Review. My name is Ola, and I'm the founder of olaoladili.com and also the founder of the Money With Club. And every Saturday, we review global news that affects your pocket. And the idea of this news is for you to understand how it affects your pocket and take decisions in light of that and make the necessary action, take action, right? It's not just for you to be like soaking things up without listening. First of all, caveats: the lighting where I am is very horrible, but you have to bear with me. I just feel like I look very harassed, but we move. But anyways, the first news going round, I will start from global news, is news coming from FTX. Now, if you have been following us, you would have known, I mean, you would have probably seen in the news when FTX came down or shut down, and then there was news around the owner Sam Bankman-Fried being sentenced to jail, 25 years in prison. Now, the idea, what really happened was that it was an exchange, right? An exchange is supposed to be safe, but somehow or the other, he was spending lavishly people's money. Now, what has happened is that the court has ordered that they pay back um, people's money along with some fine with so you will see in the news that they are talking about something called a disgorgement. A disgorgement is basically the money you got from ill-gotten money from ill-gotten methods are returned back to the people, right? So the idea is that creditors with claims of 50K or less would probably get their money plus something on top, and then some other people will get a smaller amount. But basically, the court has ordered that they pay back a total of $12 billion right now, and it's very, very good. It's good for one, the crypto market, because the market's obviously maturing. That whole idea of it being hidden is no longer as is, so people are it's becoming more mainstream, and with that level of mainstream or that profile of mainstream, more and more traditional investors can begin to look into it. Also, remembering that we talked about the Senate in the US proposing using crypto as a reserve currency, which is quite wild, but we can see that crypto market is becoming more and more mainstream right before our eyes. And so I'm excited for everyone that thought they had lost money to FTX. Um, they're supposed to come and put their claims up on the website, and hopefully, after a while, we'll come here and confirm that the payouts have been done. Bearing in mind that there's some news that the recovering agent, the managing agents, have recovered about 16 billion. So there's actually money to pay. It's actually a good place to be. Yeah. So that's that for US news. Now for Africa, I'm always excited when I hear news about Africa making good strides, because Ghana, um, after so long, you will be shocked, but Ghana just opened its first gold refinery. Um, I think it's a laudable one. Why? Because one of the challenges we see around Africa is that we are just about that initial ground level production. We are not converting in and adding value and increasing our price on the back of the value that we are creating. And so, if a whole Ghana who has always been as a country known for their gold, is just setting up a refinery, I think that's a good one. It's late, but better late than never. It should have been done donkey years ago, but we're excited for it now. What would be the impact of this? Ideally, all things being equal, if managed well, and also if they actually are able to get the international certifications that they are going for, then we expect that this would help strengthen the economy and the currency. Why? Because it's going to get more people employed, number one. Gold is sold on a global scale, on a global market, so they're going to be earning in foreign currency. And so, with employment and the foreign income, and then the higher amount of foreign income, we expect that the country over time will begin to see the benefits of the refinery. Um, the next thing coming out of Africa is that Kenya, going against the tide of other African countries, just cut their rates. Um, the cut their rate from 13% to 12.75, and they are saying that they will drop it to 11.75, which is another 1% before the end of the year. And we're in August, so that's about five months ish away, 4-ish months away, I dare say. And so we're here for it. Now, what does cutting interest rates mean? Cutting interest rates means that it is cheaper to borrow. When it is cheaper to borrow, then more people can borrow, obviously. Now, what does more people borrowing mean? It means that they have more cash and they are better able to spend, and then the economy can begin to pick up. So, one of the things that actually spurs economic growth is lower interest rates. So, if Kenya is saying that they're cutting interest rates, then I think it is going to be good for the Kenyan economy on one side. Now, the other flip side is that usually when interest rates come down, um, it could have a negative impact on exchange rates. But the Central Bank of Kenya, or the Kenyan Central Bank, yeah, Central Bank of Kenya, is saying that even though they're going to be dropping interest rates, it's not going to have an impact on their FX. Well, from my own thoughts, there is a chance that it could have data to show that the raising of interest rate didn't necessarily bring in FX inflow into the country. And if that is the case, then it means that dropping the rate is not necessarily going to make those foreign investors exit. So based on that theory, there's a chance that it actually would be as they say. There is a chance that that could actually happen. And then locals actually have that benefit of cheaper cash to begin to do business. And so we wish the Kenyan economy well at this time. They're going through their own challenges, as with all African countries, and I dare say the whole world. So let's see how that goes. Now, just a quick break to let you know that this session is powered by the Money with Club. And the Money with Club is a community of working professionals who are seeking to secure their financial future through financial proper investment, sorry, to proper investment and financial education. And what we do at the club is that we learn about investing and we take action. And so we've done all sorts of investments, different asset classes, from the traditional stocks and bonds to properties, to wine, to art, to movies. And what we're doing is that we're finding the best opportunities and we are putting our money in, no matter how small. We're taking action and we're making moves. And if you want to find out about us, then please check out our website. And also, if you're just starting off and you're like, okay, I don't really have money for this yet, we have our free Substack email newsletter, where we share nuggets and stuff. So you might want to sign up, and if there are any deals or any stuff that you want that might be interesting or available for you, you can check it out in our Substack newsletter. So if you're not a member of the club, you should at least be signed up to our newsletter. And then finally, Nigeria. Of course, I'm always proudly Nigerian, even though Nigeria as a country is a very special place. Um, so, the Central Bank of Nigeria just did a bailout for Unity Bank. Now, if you've not been in touch with the Nigerian markets, Nigerian stock market, the Nigerian banking system, the central bank called for a recapitalization. So most of the banks have to do some sort of capital raise or the other. Also, in that same wind, the central bank shut down Heritage Bank, saying that we're tired, we cannot hold you up. Just shut it down. Let's know that we're done, right? That's literally what happened. But then at the point where Heritage Bank was shut down, I remember in the club that people were like, the next bank that I dare say that in the order they would have even thought we would even thought have thought that Unity Bank would also go at the same time. And so it was obvious, and there was a lot of those sentiments and whispers around that time that what's going to happen to Unity Bank. But here we have it. Unity Bank has been granted a waiver. Now, what is the structure? Basically, what is happening is that the central bank is giving them a 20-year loan of 700 billion, and what is going to be and then at the rate of, I think, MPR minus 11, subject to a minimum of 6%. What does that mean? MPR is like the rate I just talked about with Kenya, where they said the cut rate. It's a central bank rate. So what happens is that when the central bank wants interest rates to go up, there's a particular rate they take up, and when they want interest rate to come down, a particular rate that they take down. And all the banks, deposit rate, lending rate, savings rate, everything is actually tied to that particular rate. So they're saying that that central bank with the monetary policy rate, they're going to be paying that monetary policy rate minus 11%, subject to a floor. That means the lowest rate they could have is 6%. Now, for context, in Nigeria right now, I think MPR is about 27%, as at the last increase, I think. Don't quote me, but 27 or 26, I think it's 27% at the last increase. So they would probably be paying around what, 16 right now, but it's going to calm down when rates begin to calm down, right? And then what is the money going to be used for? Half of, like, a little below half, is going to be used to zero capital. What does that mean? About 300 billion is going to go into wiping off their negative books. What that meant is that they actually had a whole of 300 billion, which is really wild. And now they're saying, okay, zero to, so your capital is zero, and then the balance of the 300 ish is going to go into government securities, right? For stability. Now, the interesting part is that Providus Bank is going to be taking over Unity Bank, the now zeroed out Unity Bank with a 300 billion investment in government securities. Now, what is in it for Providus? Providus Bank is one, a regional bank. It's only in some certain places in the country, and so Unity Bank is scarcely in Lagos, but it's in Northern Bank. Is predominantly a Northern Bank. So with this one move, Providus Bank has entered into another region with their license. That's one. Now, also with that, they've gotten, and there's no mention of any cash injection from Providus Bank, but they've actually gotten assets, because Unity Bank will have buildings, they would have cars, they would have staff, they would have IT infrastructure, they will have all those things. And so Unity Bank is going to be able to take all that in this deal. No, Providus Bank will benefit from all that in this deal. Now, good or bad, it depends on how they merge and how they're able to draw value. What we'd also expect to see is that there'll be a lot of, they would get some consultants in to see what are the things that we need to um Hey, hi Tommy. Sorry, I'm just seeing. I'm just seeing that I just saw a chat, and I had to stop and look at it. But then for Providence Bank, it depends on how they're able to do it. They're going to get a consultant to assess what should we spin off and what should we integrate to that current system. Now, as an experienced banker myself, I know that when it comes to mergers, beyond the merging of books, which is a massive project in itself, it's a hellish project, and beyond the stripping of properties and selling of assets and all that, the major thing is in culture. So if you have someone that is used to getting work done every day, and another person, hi business online, nice to see you, I always see you every week, thanks for joining in. And then if you have one person that's used to working on time and another person who's used to doing the 1 minute job in 10 hours, that is where the work is in the merging of culture, especially with the regional divide and the differences in culture and in speed and in paces in different regions in the country. So, do I wish Providus Bank well? Definitely. It's going to be an interesting one for them. I do like what Providus Bank has been building so far. They have really, really positioned themselves well as a customer centric bank. So, I am looking forward to how they are going to be able to integrate, and I do wish them well on this. Now, the final news out of Nigeria is that the federal government is to grant tax breaks to companies employing more staff. So it's not just about that. I mean, that's what the headlines stated, but it's beyond that. It's that there is a, what's it called? There's a an inflation addressing act that they are trying to put in place, basically. And the idea is that what are the things, what are the tools that they can use to actually um, stir up the economy. Now, the Inflation Reduction Act, yeah, that's what it's called, Inflation Reduction Act. So it will include things like suspension of tariff on some things, giving grants or stuff, or lowering tariffs, exemption on import duties, tax breaks for companies that are employing new people. There's like a package of different things that would affect different areas of the economy, and even grants and stuff on some other things. Now, what is this saying? That the government is trying, right? A lot of times some of the things that we see as issues, they are actually policy driven. They are actually a result of either bad policy or a gap in policy around that thing. So when we see these things in the news, why we might see like, the fact is that if this thing gets signed into law, right, you would see the effect. So what do I mean? If, for example, part of the tariffs or the part of the tariffs that gets cut or gets suspended or reduced for a period is like tariff on car importation. You know, right now that if a car is worth 1 million naira, that means the dollar value converted to naira is 1 million naira. The actual price, you pay 700K in taxes to bring that car in, or in fees, whatever you want to call it, right? So without anything, 1.7 is the cost before you now add your profits. Now, if this policy comes out and they bring that 70% to 10, it means that the cost will become 1.1 and cars will be cheaper. That is the power of policy. So when we see things like this, it's more to actually look at it and say, what will be the impact? What are the things they are going to touch? And what impact do those things have on people? And if they really would have impact, then see whether you think this government is working or not is going to have that impact. So we are on the lookout for it. I'm hopeful that these policies will make sense. As in the when I say it will make sense, I'm hoping that the actual detail of the tariffs and the exemptions would actually be things that would touch people and impact them. But I mean, once signed into law, there's no going back. We would also see the impact on this. And on this note, I want to say thank you to everyone for listening in. Thank you, everyone. Thank you, Tommy. Nice to see you, and thank you, Business Online. Also, we'll be here next week. Also, don't forget to share with your friends. Don't forget to sign up to our free newsletter. And have a beautiful week